Hi folks, welcome to today's Bobcast. I'm Bob Benny.
I'm Jessie Thompson.
And we're both CFPs, Certified Financial Planner Professionals with Bob Benny Wealth Management here in Lincoln, Nebraska. Today we're having another Bobcast. What's our Bobcast topic about today, Jess?
So in going off of the theme from our last podcast, the theme for this month is going to be our expectations for 2025. And expectations are a little bit hard when you're talking about investments, right? Because nobody has a crystal ball. Nobody knows exactly what's going to happen. But because we have a new president, there have been some different changes that he's proposed making that would generally help companies
make more money, and thus increase their value, and that's the stock market. And the stock market has already been doing pretty good, did great last year, in spite of the burdens that the government was placing on it. But a couple of President Trump's policies are going to, and we talked about this in the Bobcast last week, and so I don't want to.
We won't go into the
we
whole
don't go
details.
over everything, but lower taxes on companies and less regulations on companies are going to lower their costs and thus increase their profit and increase their value. So, but it's not going to be roses all the time. Not going to be roses all the time, is it, Jessie?
No, and we think that Trump's policies are going to be great for companies, and this year is going to be great for companies, but that doesn't always necessarily translate to immediately being great for stock prices of companies, because you have stock prices, and ultimately the value of a company is based on what their underlying value is, what their profits are.
Profits.
Right?
Earnings.
But you have another part to the price of a stock, which is that it's on an open market where people can trade it, buying and selling it, which can change the price depending on supply and demand for that particular company and that stock. And people's views of what a company is worth are not always logical. Oftentimes, people can get really worried when there's anything that makes them unsure about something that's going to happen with the government, or something that's going to happen with the economy that might cause them to sell and lower the price of the stock. And even though the company is not worth any less than it was, even if the company is extremely profitable and doing really well, their stock price might go down just because people are selling, because people are nervous because of maybe something that's going on in the news or things like that. And we're not going to be immune from that happening ever when you're invested in the stock market, but also we're not going to be immune from that in 2025.
And remember, people are fickle. The market is fickle. And people panic. And one of the things that Jessie and I pride ourselves on is we're not panickers. But people people sometimes panic, and the markets certainly panic. And a negative news story, or any news story, can, if captured the right way, can cause the market to go down. Certainly, we've seen when they talk about interest rates, the market will go down. Well, it's really not that related. A quarter point, a half a point difference in interest rates isn't going to have much of an effect on the value of a company, but it could sure have on the real value of a company, but it sure can have an effect on the market when the news media hypes this interest rate change or something like that. So our point really is simply that things are going to happen. The news is going to cause the markets to have volatility. And when we're talking about volatility, we're pretty much usually talking about market going down. But the market's going to do what it always does, like this. We believe through this year. The great thing is that companies are making money. They're going to make more money. They're going to be worth more money intrinsically. And so when you see the market going down, or hear about the market going down, or hear a negative news story and Chicken Little is telling you to run, don't panic. If you have any money on the sideline, it's a great time to buy. if you're worried about something and want to know our take on it, certainly call Jesse or I at Bob Benny Wealth Management, 421-2626 here in Lincoln, Nebraska, area code 402, or send us an email or something like that. But there's going to be volatility, like there always is, and it shouldn't affect it doesn't affect the actual real value of these companies because they're making money.
And as just a reminder, what we always want to remind people who are invested in the stock market, if there's volatility, it is not the time to make changes. There are strategic things that you can do if there's volatility in the stock market, but those strategies never have to do with selling.
Right.
And changing your investment strategy in the middle of volatility. That is a mistake. It's been proven time and time again by all different kinds of studies.
Right.
So we want to remind you of that.
We also want to remind you that equity or stock market investing, whether you're in ETFs or individual stocks or mutual funds, is not for short-term money. Mm-hmm. It's for money that probably has a minimum of a 5-year time frame. So because in a short term, in a 1-year term, it might not be a good year. It might be a year where the market goes down 10, 20, 30%. And so, but for most of our customers, particularly people that are retiring, we talked to some people just yesterday that are retiring that are at age 65. Well, his life expectancy is about 85. At a male's age of 65, life expectancy is about 83 to 85, according to the actuaries. Well, that's 20 years. That's long-term money. So.
All right. Well, thank you for watching today's Bobcast. Make sure if you're not subscribed on YouTube that you subscribe so you can see when these come out. And we'll look forward to talking to you more next week about some kind of more expectations that we have for this year.
Have a blessed day.
Thank you.